What's up, guys? Welcome back to another episode of the BJJ Lender. It's your boy Sham. Today, we're diving into the world of hard money lending, an often overlooked but powerful tool that can help investors and entrepreneurs scale their businesses quickly and efficiently. Today, we're going to explore what hard money loans are, how they're different from traditional financing, and the best ways to use them to fuel your growth. So, if you're looking to grow your business or portfolio, this episode is for you. All right, so let's start with the basics. What exactly is hard money lending? It's a form of financing that's asset-based. This means that instead of focusing on your credit score or financial history, the lender is more interested and concerned in the value of the property or asset you're purchasing. Essentially speaking, the asset itself is the main factor in securing the loan. Hard money loans are usually issued by private lenders and are often designed for short-term financing needs like funding a property purchase or a flipping project. Unlike traditional loans, which can take weeks or even months to process, hard money loans typically have much faster approval. This can be a game changer when timing is critical. They do have higher interest rates and shorter terms. So they're best suited for projects where you expect a quick cash flow or a rapid turnaround. Now, you might be wondering why. Would anyone choose hard money lending over a traditional bank loan? Well, the fact of the matter is, for investors who need to scale quickly, hard money loans offer a few key advantages that can really make a difference. First, there's the speed. Hard money loans generally have a much faster approval and funding process, which is essential in competitive markets where opportunities can disappear in a flash. Second, flexibility. Hard money lenders are typically more flexible with loan terms and underwriting criteria. This means they may be willing to work with you on a specific deal terms that a bank might not consider. Then, there's a leverage potential. With hard money, you can often take on larger projects with less upfront capital, freeing up your cash flow for other investments. Finally, these loans give you an opportunity for rapid scaling. By funding multiple projects simultaneously, hard money loans can boost your growth potential in a way that traditional financing might not be able to match. All right, so hard money loans can be a game changer for investors and business owners looking to grow quickly, but like any tool, they're only effective if used correctly. Here are some practical strategies to help you make the most of hard money lending, all right? Number one, first, it's essential to identify high return projects. You want to make sure that any project you're funding with the hard money loan has a solid return on investment, an ROI. This could be a fix and flip, a rental property upgrade, or even a commercial property purchase where you see clear potential for appreciation or cash flow. Number two, another smart approach is to use hard money loans in stages. Rather than locking into a long-term loan, consider borrowing for specific phases of a project, like renovations or property acquisition. This allows you to keep control over your financing and only borrow what you need when you need it. Number three, planning your repayment is also key. With the high interest rates on these loans, you'll want to be strategic about repayment. Set up a quick exit strategy, such as refinancing into a traditional loan once the property has appreciated or selling after renovations are completed. And last but not least, if you're really looking to scale, consider a portfolio approach. Hard money loans can allow you to fund multiple projects at once, enabling you to diversify your investments and reduce risk while growing your portfolio rapidly. Now, as powerful as hard money loans can be, they're not without risks, right? Understanding these risks and planning for them can make all the difference in your success. The first thing to be mindful of is the interest rate. Hard money loans typically come with higher interest rates. So, if a project doesn't go as planned, those costs can quickly eat into your profit margin. It's also crucial and imperative to ensure your project has a strong ROI to cover the loan's cost. Then, there's a short repayment term. Unlike traditional loans, which might stretch out over years, hard money loans are often due in 12 to 24 months. Make sure you have a clear exit strategy in place. I can't stress this enough, guys, whether that's selling the property, refinancing into a more traditional loan, or tapping another source of funds. Lastly, guys, let's talk about market volatility. The real estate market can be unpredictable. It ain't unicorns and rainbows, y'all. A sudden dip in property value or an unexpected market shift can impact your project's success. So, it's wise to have a backup plan and keep an eye on market conditions to help mitigate those risks. All right, let's look at some real-world success stories where hard money lending has made a tangible difference. These examples highlight how powerful this type of financing can be when used strategically. Take a fix and flip investor, for example. By leveraging hard money loans, one investor was able to complete multiple projects in a single year, significantly boosting their annual profits and expanding their portfolio quickly. Or consider a small business that used hard money loans to expand its commercial real estate. With the fast money from a hard money loan, they were able to secure prime locations before competitors had the chance. There's also the story of an entrepreneur who diversified their investment approach. By upgrading several small rental properties with hard money loans, they increased the rental income while building equity across multiple properties. These stories show that when used wisely, hard money loans can fuel substantial growth. All right, guys, hard money lending is a valuable tool in an investor's toolbox, especially when it comes to rapid growth and scaling. Remember, the key to use it strategically, evaluate your projects carefully, have a clear repayment plan, and always be mindful of the risks. When done right, hard money lending can unlock opportunities that traditional financing might not offer. But at the same time, it requires thoughtful planning and smart decision making. All right, y'all. Thanks for tuning in to your boys BJJ Lender podcast today. It's your boy Sham logging out. You know what to do.